Welcome to PhillipCapital Weekly Market Watch. I'm Lin Sin from Unit Trust Research. Today, we are going to look into the current situation in Thailand and what to expect in the near future. The protests have taken a toll on the economy as Thailand's GDP slowed significantly in the final quarter of 2013 at a seasonally adjusted rate of 0.6% on year, its slowest pace since the first quarter of 2012. For the whole of 2013, Thai economy expanded 2.9%, far below the revised 6.5% in 2012, when the nation was rebounding from a devastating floods the preceding year. Thai consumer confidence plunged to a 26-month low in January, after the government declared a state of emergency in Bangkok to curb violence. In addition, government's failure to pay farmers who participated in its rice subsidy program dragged on sentiment and could affect local consumption. The ambitious public investment plans to roll out anti-flooding projects and the budgeted 2.2 trillion baht high-speed railway and other infrastructure projects were approved by Parliament last year. However, these projects have been stopped since the campaign to unseat the Prime Minister, Yingluck Shinawatra, which began in November last year. The unresolved political impasse implied that many months are likely to pass before construction gets underway. Long-term investment may be reconsidered and other locations assessed, as prospective foreign investors may shun away from the market and switch to other ASEAN countries. This was highlighted when Toyota Motor Corp signaled its deep frustration by indicating that it may reconsider investing up to 20 billion baht in Thailand and could even cut production if political unrest drags on. According to Reuters, auto manufacturing is Thailand's third largest industry, accounting for more than 10% of its GDP. Despite car makers are unlikely to scale back Thai operations in the short term, but the prolonged political turmoil definitely could spur new foreign investors to look for opportunities elsewhere. Having said that, Thai stock market is at the center of the sell-off. According to Bloomberg's data, we saw net foreign investment outflow of USD 948.1 million year-to-date from the SET. Tourism income accounts for about 7% of the economy, while the Tourism Council of Thailand predicts visitor arrivals may slide by 7.3% on year in the first quarter. The Tourism and Sports Ministry remain optimistic and confident on a slightly higher tourism income forecast this year. Yingluck has been forced to dissolve the parliament by the protesters last year, while Thailand's inconclusive elections on February 2nd have failed to ease the recent escalation in political tension. With the Election Commission still unable to set new election dates, the general election may be delayed, which could lead to difficulties in preparing a budget for fiscal 2015. The budget period for fiscal 2014 ends next September. If a new government cannot be formed within 1 year, Thailand could face problems with its budgetary spending, as a caretaker government would have no authority over the 2015 fiscal budget. Nonetheless, the Budget Bureau has prepared a budget for fiscal 2015, while waiting for a new government to be formed. The draft budget, covering more than 70% of total budget for fiscal 2015, aimed to help the new government to run the country smoothly, and is currently in the midst of finalization. The controversial rice buying scheme has helped Yingluck win the 2011 election, but also resulted in the government accumulating a sizable rice inventory, delaying payment to the farmers, as well as fueling the ongoing political unrest in the country. The troubled rice scheme, already near collapse, suffered another blow when the government savings bank announced to scrap a 5 billion baht loan to the Bank for Agriculture and Agricultural Cooperatives, which manages the rice program but facing difficulties to pay farmers. The troubled state rice pledging scheme has continued to plague Yingluck. The National Anti-Corruption Commission announced that it was filing charges against Yingluck relating to the scheme, after an investigation commenced since last month. The anti-corruption body will be summoning Yingluck to hear charges against her on February 27th, and said that if found guilty of the charges, Yingluck could be removed from the office. Bank of Thailand unexpectedly held borrowing costs at its meeting last month, as the Monetary Policy Committee is of the view that the current rate is conducive to recovery and that maintaining financial stability remains a cornerstone. However, the recent downbeat data has increased the odds that the central bank will cut interest rates over the next few meetings to stimulate growth. The next meeting is scheduled for March 12. Earlier this month, Fitch Ratings expressed their concerns on prolonged political confrontations could eventually impact economic performance and undermine the nation's financial stability relative to its rating peers. Meanwhile, the Bank of Thailand cut its 2014 growth forecast from 4% to below 3%, whereas the National Economic and Social Development Board has also cut its forecast for this year to 2 to 4% from a range of 4 to 5% earlier. As mentioned above, the political deadlock may have adverse impact on domestic demand, investment environment, and tourism, and even disrupt the nation's policy making. But we expect the Thai economy to bounce back when political tensions eventually abate. However, it seems that the political standoff may linger for quite some time, as it continues to face pressure from anti-government protests, which in turn could prevent the formation of a fully functioning government for months. Although the Thai equity market may appear attractive in terms of valuations for bargain investors to enter the market, however, we would prefer to wait while continue to monitor the economic conditions and risk-factored corporate earning estimates closely. Meanwhile, investors may wish to consider the other ASEAN counterparts, for example, Singapore and Malaysia, which offer better investment climate, or consider to invest in a geographically diversified funds, which diversify the country-specific risks. Thank you for watching this week's Market Watch. I'm Lin Sin from Phillip Unit Trust. Tune in next week for more Market Watch videos.